Bitcoin continues to bash on the door of all-time highs and looks ready to break into the open air of price discovery. Meanwhile, Jamie Dimon, CEO of the largest bank in America, just bent the knee. But is banks getting into Bitcoin bullish for adoption, or a Trojan horse from the legacy system? Plus, the Senate just passed a stablecoin bill, a move that looks like progress, but could it actually strengthen the very system Bitcoin is here to replace? We hear from Lyn Alden and talk game theory, network effects, and the inevitability of $1 million Bitcoin. Bitcoin has been bouncing around just below all-time highs of $108,000 for over a week now, and it seems poised to break out any moment. And once the breakout happens, we'll be in the open, fresh air of price discovery, and no one knows where we'll end up from there. The sky is the limit. But the bigger story this week is on the banking and regulatory front. Yesterday, Jamie Dimon, one of Bitcoin's most fierce and ardent critics, is now opening the door to allowing clients of the largest bank in the US, JP Morgan, to buy Bitcoin. Dimon, who has repeatedly called Bitcoin a pet rock, a hyped-up fraud, and stated its only use cases as money laundering and sex trafficking, has finally bent the knee. Dimon's language on the matter is still adversarial, saying although they will allow clients to buy it, the bank still has no plans to custody it themselves. Yet, Jamie. Yet. Let's be clear, JP Morgan offering Bitcoin to their clients isn't a sign of support, it's a sign of surrender. Wall Street banks aren't embracing Bitcoin because they want to, they're embracing Bitcoin because they have to. Let's look at a clip from macro analyst Lyn Alden speaking at Swan's free webinar last week on why banks getting involved with Bitcoin has always been inevitable.
I put in the camp that it's inevitable for Bitcoin. So it doesn't really matter too much if it's good or bad because it's inevitable in the sense that if Bitcoin becomes an increasingly large and liquid asset, there's going to be entities that help you hold it, use it as collateral for lending, that kind of stuff. Now, obviously, pockets of rehypothecation can be problems. We just talked about what can contribute to a bear market. Leverage is what contributes to a bear market, and rehypothecation is a type of leverage. So when improperly handled, that can make our Bitcoin price be more volatile than we'd otherwise want to have it, which is a negative. But on the other hand, it's like ETFs are going to exist for any $1 trillion liquid asset, and banks are going to get involved if they're allowed over time for any multi-trillion dollar liquid fungible asset. It's already the case that if someone like runs their own business, it can be hard to get, for example, a mortgage compared to if you're a typical like wage earning employee. And the same thing is true if someone is, say, got a pretty good amount of Bitcoin compared to maybe their other assets or compared to their income, and they want to be able to consume with it without necessarily selling it. So far, there's been a dearth of lenders that will kind of acknowledge the collateral that's there and make use of it. So I do think it's normal that gets more integrated into the financial system over time, either because specialist entities come along and do it, and they use their own capital, or they get bank financing to do it, or banks get directly involved. That's maybe a maturation question for the asset as a whole. But I think that integration's got some degree of inevitability to it the bigger the Bitcoin gets. And it's just that Bitcoin is hard to rehypothecate it, and I wouldn't recommend entities making any sort of duration mismatched promises with it. Caitlin Long's covered that well. There's plenty of people that have talked about the perils of trying to do that with something like Bitcoin.
We're going to show a few more clips from this awesome webinar with Lynn, but if you want to download the full video, just sign up with the link in the description. And stay tuned to Swan Socials for more info on our next free webinar. So as Lynn alluded to, Bitcoin is winning, and not just through headlines, but through inertia. As it gets larger and more liquid, the system adapts around it. Just like the ETFs, bank integration is simply a function of market gravity. But that doesn't necessarily mean we should celebrate too quickly. Banks will try to repackage Bitcoin through their own lens, with leverage, rehypothecation, and risk. We don't need to fear that, but we do need to understand the difference between access and ownership, and make sure to educate others on those differences. That's why having the right partner matters. Someone who can help cut through the noise and build real conviction. If you're a high net worth investor or business operator looking to allocate to Bitcoin the right way, with real strategy, real custody, and real education, Swan Private is for you. Swan Private has helped thousands of investors move into Bitcoin safely and securely. With dedicated advisors, advanced custody support, and world-class research, the Swan Private team helps build generational wealth the right way. Learn more at swan.com/private. So in other news, the US Senate just advanced the Genius Act, a stablecoin regulation bill that's now cleared the cloture vote and heads to final debate. So what's actually in the bill? It states all stablecoins must be backed one-to-one by cash or treasuries. It's got strict anti-money laundering and bankruptcy provisions. It states a ban on big tech issuing stablecoins. It says states can regulate smaller issuers, and also that there are no yield-bearing stablecoins allowed. On the surface, it looks like Washington is finally embracing digital assets. And in a way, they have. And side note, if you saw Senator Warren's reaction, she didn't look too thrilled. That war on crypto, Lizzie? Yeah, it's over. But let's step back and be real here. This bill doesn't enable freedom tech. It reinforces fiat rails. As Matthew Pines put it, I like stablecoins and all, but let's not pretend they're permissionless freedom tech. They reduce cross-border frictions, unlock new fintech apps, and facilitate global access to US dollars, while expanding demand for T-bills. But the truly permissionless tech is Bitcoin. Full stop. So while the Senate builds fences around fiat wrappers, Bitcoin just keeps doing what it always has, operating outside the system by design. Many Bitcoiners talk about the inevitability of Bitcoin, which can sound crazy and confusing to people who haven't studied it for more than a few hours. But Jamie Dimon changing his tune is just another example of that inevitability. At its core, it's driven by game theory and the gravity of network effects. If you pay attention to Bitcoin closely, you realize the long-term fundamentals just keep getting stronger by the day, which in turn reinforce the game theory network effects. Here's Lynn again explaining why, despite volatility and headlines, she expects Bitcoin to keep climbing the asset ladder over the next decade plus.
My colleague Jeff Booth at EagleDeath Capital often likes to start off questions by saying, if Bitcoin remains decentralized and secure. So it's kind of like saying, as long as this thesis remains intact, that Bitcoin is the best monetary protocol, it needs to function as we expect it will, then what can we expect from it? I think we'll see probably another cycle or two of pretty significant price appreciation and appreciation of the size of the asset, probably one or two big drawdowns along the way, or prolonged flat choppy markets along the way. I wouldn't be surprised to see some of the cycles that we've come to associate with Bitcoin change in some way. Not that they go away, but they don't necessarily have to work on the cadence that they have before as the types of buyers change and become on average more institutional than they were in the early days. And as mining production becomes a much smaller ratio of coins available compared to existing coins on the market available for resale, I think those cycles can gradually change. But I do expect us to continue to over time, over that kind of 4 to 8 year period, not investment advice, but I expect us to head higher into the multiple six-figure range to start with, along, and it to be fairly volatile along the way.
The key here is if Bitcoin remains decentralized and secure. And as I mentioned before the clip, the game theory and network effects reinforce its decentralization and security. It's a self-reinforcing system that gets stronger as it scales. Bitcoin's adoption curve continues to steepen. Cycles may change shape, but the direction is the same. From 100K to a million isn't a dream. It becomes a question of when, not if. The more capital that joins this network, the more reflexive its value becomes. That's what people miss about price. It's not just about supply and demand. It's also protocol dominance. That brings us to the core idea behind all of this. Why does Bitcoin keep winning? Why do banks, asset managers, and even governments all eventually bend the knee? Because as Lynn says, Bitcoin has already hit escape velocity.
Bitcoin I view as hitting escape velocity, which is that it's the dominant, by far, monetary protocol around in terms of security, liquidity, and pretty much any other metric you'd look at. And it's still, I generally look at it as, what is its total addressable market? A pretty meaningful percent of liquid fungible assets is its total addressable market, which is when you have this really high long-term price forecast of 20 years in the future, it's because someone's saying, okay, if we look at global assets, it's a quadrillion in assets roughly. Gold is 2% of that. Bitcoin's 0.2% of that. And it's like, well, what if Bitcoin goes to 2% like gold? What if, because of its superior qualities, what if it goes to 5%? What if it goes to 10%? And I don't really try to predict what percentage it can get to, but I think that 0.2% is still low. And so I think that this monetary protocol, the network effect signs compared to any other competitor, basically 10x compared to the next, that's where the saying there's no second best comes from, is that there's no Pepsi and Coke here. It's like Coke and then store brand that you didn't hear of. And so it's not even close. And so the combination of one, dominant protocol, and two, very little adoption when you look at the grand scheme of asset sizes out there, which means ideally a lot of room to run.
Bitcoin is still early, not in terms of technology, but in terms of market share. This protocol has already outcompeted every other form of money, and it's still only 1/10 the size of gold. That's the real story behind Jamie Dimon, stablecoins, ETFs, Bitcoin treasury companies, and price action. Everyone is converging around Bitcoin because it's winning. So what does this all mean for you? It means the next breakout isn't just possible, it's already underway. Banks are on board, governments are watching, the old system is adapting, while Bitcoin remains unchanged. Fixed supply, global liquidity, no CEO, no off switch. The playbook is simple. Stay humble, stack regularly, and don't let banks or stablecoins distract you from the main event. If you're watching this unfold and you understand what's really happening, you don't want to miss two of the most important Bitcoin events happening this year. BTC Prague is coming up in June and is Europe's premier Bitcoin-only conference, gathering thinkers, builders, and leaders from all around the world. For more info and tickets, visit btcprague.com. And back in the US, this September, BTC in DC is bringing Bitcoiners to the heart of Washington to help shape policy and signal strength. Visit btcandDC.com for more info. So what do you think? Is Jamie Dimon's pivot a bullish signal or a legacy trap? Does the stablecoin bill represent progress or just more fiat window dressing? And how far do you think Bitcoin will run if we break through all-time highs? We want to hear from you, so drop your thoughts in the comments below. And if you enjoyed this episode, hit the like button, share it with a friend, and subscribe for more high-signal Bitcoin content. Thanks for watching, and remember, TikTok next block.